I truly believe that we are in a generational silver bull market. It's likely to perform unlike anything anyone's ever seen in silver before. The setup is an order of magnitude higher. I think silver will considerably outperform what it did in the 1970s.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is Peter Krauth, our good friend, and author of the new book, The Great Silver Bull, Crush Inflation and Profit as the Dollar Rises. And Peter is also a former portfolio advisor and a 20-year veteran of the resource market. Peter, thank you so much for joining us today.
Elijah, thanks for having me. It's always fun, and I think we'll have plenty to talk about.
Definitely. I would like to cover your book today, The Great Silver Bull, and kind of unpack for our viewers why silver, in your view, is an incredible investment right now, an incredible opportunity. But first, I would like to cover what is happening in the markets today. And over the last month or so, we've seen a pullback in quite a few markets, the gold and silver markets, and also the stock market. Today in the Dow, we're hitting a new year low. So in the past year, it's the lowest it's been. And also for silver in particular, we're seeing quite a downturn, and we're right around the lowest levels we've been for the last 2 years. It's been around 2150 is kind of the lowest level we've really sustained. And we're right around that area today. So what do you make of what's happening in the markets today?
Okay, so let's maybe look back a little bit, sort of bigger picture first, and then we can look sort of more near term. As far as bigger picture, I feel that we're at the end of a 40-year bull market in both stocks and bonds. They've been tremendous investments for that length of time, starting around 1981, 82. Incredibly, both of those markets over that entire time have been overall, gaining tremendously. But and that's an outlier. 40 years is not typical for even for secular bull markets. Because of that, I think that we really are at the end. If you look at what's happened with bond prices and yields have shot up. There's a technical breakout in terms of the levels that yields are at in bonds. If you look at over the first quarter so far, the first 4 months already so far this year, stocks and bonds are both down about 10%. Many people are surprised, disappointed, and shocked, especially with bonds, especially, if you look at treasuries, which are supposed to be amongst the most stable and safest investments. To see 10% down in like 4 months is not pleasant. And I think people will start looking at alternatives. And we were mentioning this earlier. Paul Tudor Jones, a highly respected billionaire fund manager, recently said that he can't think of a worse environment for financial assets. You don't want to be in stocks and bonds, and it's all about capital preservation at this point. So if you look around at what your options are, there are very few things that are, I would say, undervalued or are good value. And silver, amongst most assets, is one of the very few that truly falls into that category. If you look at pricing, if you look at the fundamentals in terms of demand and supply, it's hard not to see an incredibly compelling investment in silver right now.
And if we can get into that, I guess, what is your perspective on why silver right now seems to be such a bargain? As we get into the fundamentals of silver and why it is such a good investment, it seems like right now is a screaming buy. We can't give personalized financial advice, but we are at pretty much the low of where we've been in the last 2 years. So Do you see it holding this area, and why do you think it's fallen so dramatically in the last few weeks and about a month or so?
Right. So silver, like gold, doesn't pay anything in terms of dividend, and there's an opportunity cost for holding silver like holding gold. If you hold these assets, you're holding them for capital gains and not for yield. And so if you look at what's happened with treasuries, as we mentioned at the beginning, yields are up considerably. And so people can now start to buy treasuries 7 years out, 10 years out, and make somewhere close to 2.5, say 3%. It's not outstanding. It's certainly nowhere close to what inflation is paying. So after inflation, you're still a loser. But if you're looking for relative safety and some yield, treasuries have newly issued treasuries have become more attractive. And so that is certainly helping to the yields there have helped to push up the dollar. The dollar also competes with gold and silver. And so a higher dollar makes silver more expensive on that relative basis. But if you look at silver over the last, say, 2 years almost at this point, going back to early 2020 when silver absolutely exploded higher in the sort of the peak of the pandemic panic, went from a low of 12 to all the way to almost $30. It's been in a sideways range since then, between about 21, 22 and sort of 29 on the upside. And it's always possible that there's a little bit lower to go. But I don't think that realistically the floor in silver is much lower than where we are right now. There's so much demand for silver. We can get into that maybe a little bit afterwards, but there's just so much steady, solid demand for silver for multiple reasons that I think that the floor is close to where we are now, and anybody getting involved in silver, investing in silver now, has very little sort of downside risk and a whole lot of upside potential.
And in your book, you kind of go through the different fundamentals of the silver market, and silver in particular is such a unique metal because if you look at gold, it's served as money, yes, but besides that, it doesn't have too many uses industrially. But silver is a monetary metal that's a safe haven asset and also has industrial demand. So it's just such a unique metal in that sense that it's in both worlds. And if we wanted to start with the first part of that, the silver's history, right? You go over this in the book and how really even more than gold, silver has been used as money. Why do you think that is? Well,
silver, it might have been a question of availability. In fact, that's not something that's clear. But if silver was, mined sort of ounce per ounce more readily, higher quantities of silver, so it was available on a higher quantity basis, and it has a lot of the same properties as gold. It's relatively difficult to find. It maintains its value, and then compared to gold, it has utilities in terms of industrial uses and so on. It's reflective, it's conductive. And so if you look back in history, at the very least, we're talking about several thousand years already, silver was actually the first true international currency. The Greeks fashioned the first silver coins that were used in trade, and that allowed trade to expand. Commerce took off. And people from different nations and different backgrounds started to accept silver as an item that they would trade, that would hold, that had value, and that would hold its value against the goods that they were offering up against it. So that allowed for a lot of trade to flourish. And interestingly enough, silver was actually part of our money until the 1960s, where in the U.S., Canada as well, it was part of the coinage. And it was eventually removed from there. So, we're talking about thousands of years where silver was part of money, and only the last 50 or 60 years where it's been removed from money. So there's a much, much longer history with silver as money than silver without money. So that's why I think that it certainly has a place. It hasn't lost its beneficial properties, and it's whether it returns as money in some form or not. That's up for debate. Anyone's guess. Is it undervalued and likely to be revalued much higher? That I believe absolutely, and so very, very attractive asset.
Now, the interesting thing is how central banks don't really hold silver. They hold gold, but they don't hold silver. And if you see the trend recently, central banks have been purchasing more gold. They have been requesting delivery of their gold held maybe overseas, but there's no talk about silver. Why do you think central banks have kind of put silver to the side when it has actually served a greater monetary role than gold throughout history?
Well, the silver that has served as a monetary role has been out in the public and has circulated in the public. And because it has a lower per ounce value, let's say, it's easier to use perhaps on a transaction basis if you want to do daily transactions, buying food, buying smaller value goods. It makes sense to use silver, or has made sense for sure to use silver. Think about it, was in the coinage, right? So quarters, dollars, half dollars, dimes, nickels, that sort of thing. But if you look at what central banks do, if they're going to store a metal for its value and to have perhaps back a currency, which it has, certainly gold has backed currencies as well for hundreds of years. I talk about that in one chapter where I show that gold has been part of global reserve currencies as well for going back, I think it's 600-700 years or so. The advantage I would say that gold has is because it has a higher per ounce value. They need to store less. So if you're not going to use it in day-to-day transactions, but you're going to use it to store and back your currency, then gold makes sense because you don't need to store as much of it. The paper notes, let's say, that are issued that are technically backed by that metal, are going to be the ones that are circulating every day, but you need to store less metal in order to back that currency.
Now, when it comes to why silver today, you mention in the book really all the financial shenanigans that are going on, especially since 2008, where the money supply has ballooned and the COVID-19 pandemic, it was completely unprecedented what the governments around the world did with their monetary systems, just increasing them incredibly. Now, can you share with our viewers your take on the financial system right now and why what is happening is so bullish for silver?
Sure. So, actually there's one chapter in there where I talk about the money supply. And I look back at it's funny that as a society and as humans, despite a lot of us reading and following history, maybe it's the wrong people that are reading it, but we're not learning from it, because what is happening now is very much things that have happened in the past. In France in the 1700s, there was what's called the Mississippi Bubble, and so to keep the story kind of short, the King of France had borrowed through the nation's access to funds, used a lot of the nation's access, the nation's funds to build himself like a whole suite of castles across the country. And it got to the point where the country was so indebted it couldn't afford the interest anymore. And a guy by the name of John Law shows up and has a solution for him and tells him what you need to do is establish a central bank and issue paper currency, back that currency, at least initially, with gold and silver. It allows you to print paper notes. And so, that's what they did. They rolled out the paper currency. People bought into it. And then saw that he needed to kind of up the ante a little bit and used there was at the time the East Indies Company that a lot of the rest of Europe was benefiting from, especially say Holland and England. And he thought, well, the Mississippi Company, if I establish this company, and France owned land in what's now the southern U.S., Louisiana, et cetera, that we could do something similar that the rest of Europe was doing with the East Indies. So started the Mississippi Company, issued shares, But realistically, there was little economic activity. There was little to be gained by this Mississippi trading company. But in order to support those shares, kept issuing banknotes from their central bank. And as the share price in the Mississippi company, would trail off, he'd issue more notes again to just keep printing more notes to have more money circulating and try and support the share price in that company. And that eventually became the Mississippi bubble. People realized that there wasn't the gold and silver backing the notes to the degree that they were saying there was. People basically, there was a good old fashioned run on the bank that blew up. The Mississippi company, people realized that the business didn't have the revenues that they were being told, and that also eventually failed. The stock price crashed, and he had to flee. Eventually, fled to and lived and died in Venice. And so the reason I go through all of this story is that it's really not very different from what we're living today, and yet that's 300 years ago. And so we haven't learned. We've been through. We've taken gold and silver out of our currency. That's allowed us to print a lot more of it. That really got a big kick in the after the 2008-2009 financial crisis, and it brought into, I'm going to say, if not official, at least technical practice, the idea of modern monetary theory, where you can have deficits as much as you want. You just print the money to fund them. And that went up by an order of magnitude when COVID hit. And, in the 18 months that followed the COVID pandemic, there has been, of all of the US dollars currently circulating, 25% of all US dollars currently in circulation were created in that 18-month period. So that's just an astounding number. US debt tripled in about the last 15 years, from 10 trillion to 30 trillion. That's also incredible. In the last 20 years, the global money supply is up by 5 times. Also crazy. And if you look back at, I guess the best analog for a similar period where you have high inflation and, sort of anemic economic activity, it's the 1970s. And there are some very good parallels, but there are some differences. In the 1970s, the debt to GDP ratio was 35%. So debt was just 35% of the country's economic output. Today, it's 130%. So nearly 4 times more debt, as much debt as there was in the 1970s relative to the country's economic output. So the ability, with that level of debt, the ability for central banks to be able to raise rates significantly and to keep them up is next to nil. I just do not see that happening, not in a realistic way. They've started, and they're going to continue perhaps for the next several months, raise rates. And I think that's going to end very quickly, and they'll have to make a choice. Either we tank the economy because we raise rates enough to fight inflation, or we back off. We don't technically kill the economy, and the lesser evil is to let inflation run. And I believe that's the choice that they will end up making. They will allow, so to speak, inflation to run.
Now, you mentioned also in the book the unique situation that the U.S. is in, with the dollar being the world reserve currency. And you look back at history and say, well, for the last 600 years, it's been kind of consistent. We're around every 100 years, the world's reserve currency fails. And that's what we're seeing right now with the dollar failing. What kind of situation, how is the U.S. in a unique situation here, having the dollar as, the currency, but also as the world reserve currency, and that failing?
So there are a couple of things there. One is that the implications are that having the world reserve currency and it being unbacked. So that's a big difference because those previous currencies, reserve currencies, were actually backed by gold, for example. And so that brought some sense of, control or limits to those currency issuers. Today, you don't have that limit. And so the reserve currency, the US dollar, just gets printed and printed and printed. And so you have basically, you're living in an experiment. You have not previously had a reserve currency that was unbacked. So that has allowed debt to exponentially grow. We haven't been there before. And so we're at a point where we have just so much debt, and trying to raise rates enough to limit inflation would make paying the debt impossible. It's just become so big. And we talk about debt on a let's say on a national basis, but you've got so much debt also at incredibly high levels on an individual basis, on a business basis. And so it's not just individual countries, but the people in those countries. It's businesses that are currently operating that are facing historically high levels of debt, and they've taken on that debt because interest rates have been kept low. So there's an interesting topic that I broach in the book called financial repression. And so we've actually lived through financial repression a couple of times in the past century, and that's especially in the 30s and then in the 40s. And so when you have high levels of debt, and what the government tends to do is, in order to help itself pay back that debt, it forces and keeps interest rates purposely low. So that makes it easier for the nation to repay the interest on that debt. And because inflation is allowed to run, the dollars that are being created and that are circulating have increasingly less value. So for that country to ultimately pay back that debt in future dollars that have less value has eased the burden, essentially. And so it's done purposely, but it's awful for savers because, if you can imagine retirees, for example, who've built up a nest egg and say, okay, I've got, $500,000, I've got $1 million saved up, and now I'm going to be able to live off the interest. That's no longer the case. It was the case maybe 15 or 20 years ago at 4 or 5% interest. You really can't do that anymore. And so that's the repression part. People are being forced, to essentially lose buying power, not being able to live off the interest from their savings, and losing buying power through inflation. So anybody that sees that and understands it is starting to look for alternatives. And it's sad because it forces people to, at the same time, become speculators. They can't put all or enough of their money into safe investments that pay high enough interest or dividends. So they look for alternatives. And that forces them, as I say, to look for things that perhaps have higher risk, but are relatively undervalued. And one of those things certainly is silver, as we've mentioned.
No, you've mentioned that this is really the key that practically guarantees a higher price for silver. And obviously, we don't give financial advice. We don't make guaranteed predictions or anything. But in your book, you mentioned that the relationship between interest rates and inflation is the key in this case. So why is that relation so important, and how does it relate to silver? If you can reiterate that for our viewers.
Sure. So, that's been the single best indicator that tells us if gold and silver are going to be and remain in a bull market. And so this key or secret key is what we call real rates. So you take the current interest rate, you subtract inflation, and you get the real rate. So let's say you take a 10-year treasury right now, and if it's yielding, for example, 3%, but you reduce that by inflation, which is at 8.5%. So you're actually losing about 5.5% a year. So you're, on that basis, if you have $100 today, in 10 years, that $100 is going to lose 40% of its purchasing power. You'll have about $60 worth in 10 years. That's nearly half in just 10 years. So, this relationship between real rates the interest rate minus inflation has shown itself over time to bear out how gold and silver behave. When you have a real rate that is below zero or falling, you have a positive environment for silver. In the book, I have the chart of real rates versus gold, and then I purposely went and created the same chart to analyze it of real rates versus silver. And the one most people know of and follow is the gold versus real rates chart, but the silver versus real rates is nearly identical. So it tells us that over time, silver will behave very much like gold does in a negative real rate environment. So that's absolutely where we are now. Real rates started falling in late 2018. They crossed below zero, and I think it was late 2019 or early 2020. I can't remember exactly now, and have been below zero ever since then. And gold and silver, if you look at prices in late 2018, have actually shot up tremendously. If you look at their prices today, there is certainly plenty of negative sentiment. It doesn't look or feel like they're performing that well. But if you look back over just a couple of years, 2 or 3 years, both gold and silver have actually shot up tremendously and have maintained a large portion of their gains. And ultimately, I think when the end of the Fed's bluff will be when it realizes that it can either no longer raise rates anymore, or it has raised them too much already and either needs to stop or to back off. That will be the end of, it's not even a party, but it will be the end of, if you want to call it the party. That's when absolutely gold and silver will take off. The market will realize that the Fed really has been trying to make us believe that it has the ability to fight the inflation, but truly it will have to show its hand, and that will be when all bets are off and both metals will absolutely take off.
And it seems like this bull market is going to be different because of the amount of people involved. We've already seen, as you mentioned in the book, the silver squeeze 1.0 and 2.0 taking off on social media. So there are so many more investors that can be involved in this bull market in silver, as opposed to back in the 1980s. The internet has changed everything, where everyone in the world can take a smartphone and just make a trade right there. So how is that going to change the dynamics of this market?
Right. So, we can actually dial back for a second and look back at one of the things you mentioned about how silver is different. And one of the big ways is that silver is a much smaller market than gold. If you look at the annual supply, the value of the annual gold supply is about 270 billion ounces, and the value of the annual silver supply is around 27 billion ounces. So that's roughly, say, 10%. So silver is 1/10 the size of the gold market. So being that much smaller, it takes much less buying and selling to push silver around, and that the same goes for silver investments. So what took place a little over a year ago in the silver squeeze, the social media triggered silver squeeze, was that there was a call to buying the SLV silver ETF because there is this thought that there's a lot of pressure on the silver prices, that it's constantly being shorted through the futures market. So this call to action to buy the SLV silver ETF, the idea was to help squeeze that short position, get the silver price to run up, and I guess hurt the hedgers, so to speak, the shorting. And so it worked, but it was, it had limited success. It worked for, I guess I'm going to say, a question of days, perhaps weeks. The silver price went from about $25 to $29 in a matter of days. Silver stocks absolutely shot up. The average silver stock was up 30 to 40% in a matter of 2 or 3 days. Physical silver was something else entirely. Interestingly enough, in terms of the market and the availability, I talk about that in the book, how a lot of silver dealers, bullion dealers, were completely overwhelmed. They'd never, in decades of running their businesses, had ever seen anything like that. That this all took place the last couple of those 2 trading days were the sort of the Thursday, Friday, I believe. And then over that weekend, there was a flood of silver buying. People were trying to get their hands on even small quantities of silver. And that was the interesting part, is that not only did those dealers, were they overwhelmed, many of them had to shut down. They had no more stock. Delays went from 2 to 3 days to 2 to 3 weeks. They also they reported that the vast majority of the orders were for small quantities. So what it told them was that it was a lot of retail investors that just came into that market and said they wanted a piece of it. They wanted to buy themselves a small quantity of silver, and premiums absolutely shot up. They were already not normal. They were already double of normal, but they went to in some cases triple and 100% above normal. So it was an incredible event. What it did was it introduced an entirely new generation to the idea of investing in silver. And I think that because of the social media aspect of it, I think that it's going to keep them engaged and interested in the silver market. They've seen something that for many of them, did not know existed before, and they've seen the potential. And I believe that they're going to continue to participate. I just want to add sort of one little thing. Obviously, crypto has become a big thing. A lot of people are interested in it. It has tons of, advantages and great aspects to it. But I think that in terms of, say, money, so to speak, or, money that has value and will retain value, I think what at least hopefully will eventually see is some kind of a blend between crypto and precious metals. For example, precious metals backed crypto. And there are plenty that exist. I have in one of the chapters, I talk about that, in fact, with some detail. And interestingly enough, this past March, I believe it was when gold peaked at around a little over $2,000, right? A little bit after Russia walked into Ukraine, that the 2 largest gold-backed cryptocurrencies had reached a combined $1 billion of value. So I found that a really interesting statistic. And what it told me at least, is that you have people who are comfortable with crypto that are still looking for value and have decided that if they're not necessarily going to go and buy, a physical bar of gold or silver, but they have confidence and they have comfort with crypto that is backed by gold or silver, then that's a way into this market for them. And that could be a tremendous source of new demand for silver. I really believe that that's something we could see very much, very solid source of demand in the future for precious metals, silver especially.
All right. Well, Peter Krauth, thank you so much for joining us today and kind of highlighting some of the main points of your book. If people are interested in getting your book, The Great Silver Bull, where can they find it? And if they're also interested in learning more, what are some of the sites they can visit to find you?
So the book is available since about a week on Amazon. Just type in The Great Silver Bull, and you will find that there. Available both in Kindle and paperback format. Delivery is usually a couple of days, so it won't take you long to get your hands on it and start devouring it. Other than that, I have a site dedicated to the book called thegreatsilverbull.com. So you can look for any news or developments there as well. And my day job is a silver newsletter called Silver Stock Investor. So people can find out more about that at silverstockinvestor.com and see, what I do on a daily basis when it comes to silver investments.
Any last thoughts before we let you go, Peter?
Yes. Silver is, I believe, I didn't call the book The Great Silver Bull for no reason. I truly believe that we are in a generational silver bull market. It's likely to perform unlike anything anyone's ever seen in silver before. I know that if you look at silver prices today, that might be a little bit more difficult to come to terms with. But look back on how silver has performed in the past. It's very likely to repeat that. I mean, a great example is the 70s. Silver was up 3,700% in a decade. And that's when debt to GDP was 35%. Today, we're at nearly 4 times that. Inflation is very likely to not come under control the way many people think or hope it will. And so the setup is an order of magnitude higher. I think silver will considerably outperform what it did in the 1970s for all these reasons. And it's still very cheap today. It's still 50% below its all-time high. It's about 85% below its inflation-adjusted all-time high. So to try and find something that is this undervalued and has such high upside potential today, I really don't think you'd find anything else.
Peter, once again, thank you so much for your time, and God bless.
It's a pleasure. Thank you so much, Elijah, and I look forward to chatting with you again soon.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.